Hi. Let me show you a very simple trading strategy that works really well in the markets. The strategy contains only 3 indicators, plus the ATR indicator for money management. This is a trend-following strategy. That means I will only take trades with the trend. That is why I will use the 200 EMA to identify the trend direction. By the way, this is on the 1-hour time frame. I will use the Chaikin money flow, or CMF, as a confirmation indicator. I will use the RVGI indicator for entries. Both indicators are on default settings. The stop loss will be 1.5 the ATR, which I have here as trailing bands, just to save myself the time of calculating the ATR value manually. Feel free to use the normal ATR indicator if you wish to. The take profit target will be 2 times the risk, which means 2-to-1 reward to risk ratio. Let's get on with the strategy. The rules for long trades are: 1. The price must be above the 200 EMA. 2. The Chaikin money flow must be, or cross above zero line. 3. The RVGI must cross upwards. I will give the indicators one candle to agree. For example, if the RVGI crossed upwards and the price was in an uptrend, but the Chaikin money flow was under the zero line, I will give it one candle to cross above the zero line. If it did not, I will skip and wait for another signal. The rules for short trades are the opposite. Let me show you long trade examples. Here, price crossed above 200 EMA, RVGI crossed upwards, and Chaikin crossed above zero line. This is a long trade. I will buy on candle close and put stop loss according to the ATR indicator, which is 1.5 ATR away from price. Take profit 2 times risk. This was a winning trade. Here is another example that came right after the last trade. RVGI crossed upwards, price is above, and Chaikin is above zero line. That is a winner as well. Here is a trade which happened to be a loser. But that is not a problem, more opportunities will come. Since I am using 2-to-1 RR, I should expect losers more often. Feel free to use any RR you want. Here is another trade. The take profit target was almost hit, but the price reversed and hit my stop loss target. Such loss could easily be avoided by moving stop loss to break even after the price has moved 1 time the risk, for example. It is up to you how you optimize this strategy. This next trade was a winner, and it covered the losses of the 2 losing trades. Now let's see some short trade examples. Here, the price has crossed the 200 EMA down, the Chaikin is under zero line, and the RVGI crossed downwards. That is a valid signal. Stop loss according to ATR, and 2 times the risk for the take profit target. That was a win. This is a winner. Now for this one. Here it was a winner, but depending on your broker, because of spreads, the take profit might have not got hit. So I won't count this one. This is an invalid signal because the Chaikin was above zero line. Here is another winner. And the last example was also a winner. Those were 4 winners in a row, excluding that trade I talked about. That is it for this video. Do not forget to test it before using it.